Ladies and gentlemen, welcome back to TLT Talks. We have got an exciting show for you today. Winter's coming. We've been talking about this for quite some time. And not just metaphorically anymore, it's cold. It's cold outside today. So, on with us today, he's got the hang of it now, is going to be Christian Wynn from Citizens Bank. Oh, maybe I spoke too soon. There we go. Whoa, with a halo over him. Look at that. Got a
I'm an
halo
angel
above him.
today.
I
I'm an
love it.
angel.
You are an
Let's make this
angel. You are an
happen.
angel. Just in case anyone may not know yet, Christian Wynn is the Litvak team guru mortgage broker, and the Litvak family has just purchased a property for themselves. My wife is very happy. Thanks to this fine gentleman, we're going to be talking about the market today, but also about some of the wins of actually me buying a property and then how we were able to successfully get there, and things of that nature. So, Christian, it's been a while since our fans have seen you. Why don't you give us a quick background? And
Yeah.
it's been a while, a fun fact. It can be the same one, or maybe you have a new one. Either way works. Either way works.
Well, a current fun fact right now is I'm actually in Singapore. It's
There it is.
12:30 a.m. I'm here for the BNI convention, and it's been quite an experience just kind of learning from other people and learning what the leadership team is doing and what we do to kind of build up relationships. And what we are in a business of relationships, right? We don't want to just be a transactional person. We
Mhm.
want to be taking care of someone and taking care of their family and their friends. And what do we do to kind of make that happen? And so it's been really great so far, and I've been learning quite a bit of information. I'm excited to kind of share
Very
it with the
cool.
world and take it from there. I drank the Kool-Aid. I mean, I've been drinking the
Nah.
Kool-Aid, but I drank the Kool-Aid. You know what I mean?
Very cool. Well, and that's why we do. That's why we work so well together because we
Yeah.
practice the whole broker for life model, and you do at a very high level as well. And I can speak to that not only from the perspective of the way you work with our clients, but I too am a client of yours, and the way you've treated myself, my family, the project. You've done literally the impossible, and so we'll jump into some of that today.
Yeah.
I actually have an interesting fun fact today, Mr. Rima. How goes it? Michael Rima, sick from home and still on TLT Talks. Love it, guys, a legend.
Love him.
I
Great guy.
actually have a fun fact today. I put a story up. It's a little bit of a nostalgic morning for me. I put a story up earlier today. You know, uh, sometimes we want something. Brad, how's it going, my man? Sometimes we want something, and we're not quite sure exactly how we're going to get there. So one of those things for me was I loved the idea. Maybe it's from all the seminar life, but I love the
Yeah.
idea of doing public speaking, right? And not from like a place of ego, but like I love. I mean, you know me. Like I love giving back, and I love paying it forward, and I love to help people move forward. And I'm like, you know what? If I have a platform where I can share these things, I'll be able to impact people's lives, and that'll make my life mean something. That means a lot to me. I mean, of course, I do that daily for my
I
kids
love it.
who you know how kids are with their parents. Kids don't listen to their parents, but so today's kind of a special day. I mean, I did a one-off. I spoke on Tony stage like a couple years ago. That was 10,000 people. That's pretty big. But it started with, I'm like, you know what? I don't need to wait for a platform. Let me just create my own. And so we're on our 51st show with this thing. And that's pretty cool. And then this morning, I got asked to jump into a Florida Compass Mastermind, where it's the top 100 team leaders of Florida. And I got to share about building a business and P&L. And it was like, and then right after, man, I just got flooded with emails of thank you so much. You're so much. And I'm like, my God, this is exactly what I want to be doing. I want to be touching people's lives. And then later today, I've got a podcast on innovative market with entrepreneurs, yada yada. It's going to be a Q&A. So all of a sudden, like you just one foot in front of the other is what I said in the story. Like if there's something you want, just put it in front of you. Just take small steps, and all of a sudden, bam!
You're
Like three speaking things in one day. Like it just here you go, here you go.
you are living the dream. You're living what you
I
wanted to
love it.
do, and that's pretty amazing. So
Yeah,
kudos to you,
yeah,
and we'll just continue
yeah.
to keep on grinding.
Yeah, that's it. That's it. But that was cool. So for anybody watching, if there's something you want, let's go, baby.
You
Go
got to make
after
it
it.
happen.
Go
Go
after
get
it.
it.
That's it. That's it. All right, see. Well, let's jump in. Let's jump in. So the Fed is determined to continue to raise rates. Look, for anyone that might be upset with the Fed, don't be. You know, essentially the Fed's doing its job. The Fed's primary job is to keep inflation at around 2%. That's what they're supposed to do. They have no feelings or emotions about it. When inflation occurs and things get too crazy, the Fed's job is to use its tools, most primarily the interest rate, to make money more expensive, to decrease the value of things. So we go back to homeostasis. And so that's what's happening. Christian, tell us what you're seeing on your end. What's going on with the rates on the different products? Give us a quick update.
Yeah, sure. So, rates have been very volatile. I think this week it's actually been pretty nice. It's been going back down a little bit, but it's all about relativity, right? I mean, people are still kind of comparing their COVID rates to where they are today. Like, oh my God, it could have been at 3%. Now it's at like 7%. And, they don't really know where rates are going to be next year, next 2 years. And, if next year, next 2 years, if rates were 10%, now you'll be saying today's rate, oh my God, rates are at 7%. I wish I had bought, right? So it's kind of like, damn if you do, damn if you don't. And the way that we kind of tell our clients now is, we just want to live in the payment, right? We talk about what we're trying to do to get people into the homes. And so even right now, Citizens Bank has launched a pretty nice product, and it's our interest-only product. And we are pushing that out pretty aggressively just because we know that interest rates are higher, and we want to kind of get people into their homes. And our interest-only product is a nice product where it's definitely much lower than a 30-year fixed. And on top of that, you're paying just the interest portion of it, which it kind of helps alleviate some of the payment pressures that they're getting from a higher interest rate. But the beauty about the interest-only product is you can actually pay principal as much as you like, and then the moment you pay down that principal, your interest-only portion gets recalculated the next month. So it's a nice product. I think it's something worth exploring. Obviously, you have your traditional 30-year fix, you have a 15-year fix, but obviously, if you're doing a 15-year fix, your mortgage payments are going to be much higher because you're condensing it from 360 payments to 180 payments. So that's going to be a little bit more drastic in that. But there are other loan programs out there, such as Sony May and other government financing programs. And depending on the qualifications of a client, that's how we kind of determine the eligibility of what they're able to qualify for. So things are happening where we're trying to make some moves. And I know that one of the topics we wanted to discuss about was interest rate buy down, right? Because who knows if, let's say, rates go up next year or next 2 years, we're trying to kind of make their payments steady for the next 5, 7, 10 plus years, right? So in the case of, let's say, a person buying a $2.5 million place at 20% down, your loan amount's at $2 million. And if you're looking at today's rate, it'll be at 5.5%, right? If you did an interest rate buy down.
Let me pause this for a second. Yeah, let me pause for a second. So this is also valuable. So let's start with rates. Give me ballpark. I know that you can't call exact but ballpark. What's a 30-year fixed? What's a 10-arm? For those that may not know, the three major chunks of mortgage products. You've got your fixed rate, 15 or 30. That's just fixed. You've got your arms, which are your adjustable rate mortgages. And that just means it's fixed for whatever years, 5 arm, 7 arm, 10 arm, and then it goes to the adjustable, and then you have the interest-only product, which Christian was just mentioning, which can also be 5, 7, or 10. So Christian, just give me like 30-year fixed rate ballpark, 10-year arm rate ballpark, 10-year interest-only rate ballpark. Where are the rates sitting at the moment?
30-year fixed today, 6.375%. A 10-year, you're looking at 5.5%, and then 7-year, 5.375%. So not as crazy. And obviously, it is depending on loan amount because you have different loan programs that are specific to certain loan limits. And so if we were talking about like a Fannie Mae loan deal, you're probably looking in the low 7% range or high 6%. So like I said, it is very specific to a client. Every client is unique with their situation, and we try to cater a mortgage product specific to them to help them navigate through their options.
Yeah, that's right. Spot on, man. All right, cool. So look, guys, the rates, I mean, if you think about it, the 5-year arm you said, or the 7-year arm, that was what, like low 5s you said?
Yeah, like 5.375, yeah.
So basically, like, look, does that suck as compared to 2 or 3 years ago when we basically had negative interest rates? Yes. Historically, all time, is it bad? Not really. I mean, like think about it this way. For anyone that's considering buying, inflation is currently sitting at about 8%. That's ballpark where it is, right? If you borrowed money from the bank at 5%, you're at negative 3% of inflation. So you're borrowing money at negative inflation. And so even if you're borrowing money at 5%, still a very good deal. We're just brainwashed to this magical number of 3% where we sat for a long time while the government kept flooding the economy with money. Oh, there you go, Mike Lieberman. Marry the property,
Boom.
date the rate. I love that. I love that. Maggie's in here from New Jersey. What's up, Maggie? All right, cool. So basically, we have our rates. We touch on our products, and look, there are different ways to approach what kind of loan is right for you, right? And so if you know, the one question that I ask every single time that we sit down with a buyer, whether it's a first-time home buyer or they're buying for the 20th time, the one question that I ask that almost unanimously does not have an immediate answer is, for how long do you plan to own the property? Every time I ask this question, I get some version of an emoji shoulder shrug. You know, like, or you know, like, so we haven't really given that much thought. Oh, cool. You're gonna buy an asset. It's gonna be the most expensive thing you ever buy.
Yeah,
Don't you want to give some thought to how long you're gonna own the thing? You know, like
100%. Yeah,
for everyone out there that's thinking about buying, again, whether you go, the product you pick will in large part depend on for how long you own the property. Example, every property I've ever bought, we've always used the interest-only product. I never thought that I'm going to buy a place and be there for the next 20 or 30 years. So as you heard Christian say, the 30-year fix is in the mid sixes. The arms are in the mid to low fives. It's a significant difference. And so we'll touch on the dollar amounts in a sec. But essentially, if you know that you're not going to own the place long term, why would you marry yourself to a mid sixes rate versus a mid fives rate, right? So it's an important question. Now, if you do think you're gonna, buy the home and be there for the next 30 years, and you just want to pay it down, okay, there's an argument that could be made for the 30-year fix. But even then, I might argue, why not do a 10-year arm, buy yourself to that rate, and just try to pay down in the equivalent amount of time or faster, and then if anything, refinance. So there's a lot. There's so many. There's so many different nuances, and if you are someone that's looking to buy, make sure you speak with myself or Christian or someone. But it's just important to understand, just because rates are going up doesn't mean go and run and lock yourself in for the 30-year fix because rates are going up. Like it's not necessarily that. And
right.
Christian's bank, the IO product is amazing because for certain people that qualify, thankfully I was such a person, you can even do 90% financing. They do an 80% loan and then a 10% home equity line of credit. And basically, like, you can buy a $2 million asset for 10% and end up with a monthly payment that's like about $7,500 to $8,000. Just think about that. You could buy a $2 million asset with 200 grand and end up with a monthly payment of like $7,500 to $8,000. So if you're curious how we can have that chat, Christian, anything to add to that little?
Yeah, for sure. I mean, it's kind of like choosing the lesser of two evils in this current rate environment, right? Specifically for people who are currently renting and they have high rents, maybe $5,000 a month, $6,000 a month. Well, $5,000 a month, over the course of 10 years, you're spending $600,000 in rent. That's money you'll never see back again. Versus, yes, rates are a little bit higher today, but at least you're in the property and you're actually building equity towards your own home. So when you do sell, you're actually going to get some money back, right? So it's kind of laying out all the information for a client to make their own educated decision in getting the place they want to live in.
Yeah, that's right. Spot on, man. And just to add some color in the way of numbers. So the last time I did this was about 4 years ago. We were looking at the 30-year fix, the ARM, and interest only. And the rates were similar. The rates were lower then, but the gap between the 30-year fixed and the ARMs and the IOs were similar. It's always about a point, somewhere between 3/4 of a point and a point. The 30-year fixed, you're almost always paying somewhere between 3/4 of a point and a point more for that illusion of security, right? Or that's, you could call it security fine. So the property we were looking at then was $2 million, 1.85 to be exact. And a 30-year fixed at that time, the monthly payment would have been $8,800. So at that time, it was just way out of my budget. The 7-year ARM was $6,600. So that 1 point difference on a lower rate, which means now the dollar amount will be even higher, was about $2,200 per month. That safety of that 30-year fix, without thinking about whether am I really going to need it for 30 years or not, the cost of that illusion of safety is 25 grand per year. What could you do with 25 extra $1,000, right? And
a
then
lot.
the difference, and then the difference between the IO and the ARM was another 2,200. It was 8,800 for the 30-year fix. It was 6,600 for the 7-year arm, and it was 4,400 for the 7-year IO. Now that property, we knew we were only going to hold it for 3 to 5 years. The market was massively appreciated. We felt comfortable to pull the trigger. But essentially, a property that the price didn't change, but my payment went from 8,800 to 4,400 with only 10% down, because we chose to do this interest only. And by the way, we owned it for 3 years. We sold it for $2 million. I walked out of that. I rolled it over into some investments, and boom. And I didn't, for 3 years, if I would have paid 8,800, that's $4,000 a month. That's 50 grand a year, 48,000. Technically, that's $150,000 I didn't have to spend on interest that I'll never see back. So look, it's worth having a conversation. One thing about buying a property, of what is the best possible rate. Now things have gotten even sweeter because the rates have gone up so much. Banks like Christian's Bank, and it's actually becoming pretty standard across most banks, there's all these different and creative ways to bring the rate down. So, Christian, do you want to talk a little bit about the wealth branch, the buy down? Do you want to talk a little bit about those options?
Yeah, for sure. I mean, I would say the immediate thing that to kind of present would be, there are properties out there right now, and I don't know if they're selling fast or not. You would know better than I would, but to say, I want asking for a $50,000 concession on the purchase price is not the same as asking for a $50,000 seller's concession to buy down the interest rate, right? Because $50,000, yes, you kind of see that immediate savings, but this is a mortgage. Whether you have it for 30 years or even the 5 or 7 years, using that interest rate, using that seller's credit to buy down the interest rate is quite drastic. I mean, even back to my example earlier, I was talking about at the 10-year IO at 5.5%. If you buy it down to, let's say, $35,000, right, which is about 1.75 points, your savings is $833 per month. $833. You do that over the course of 10 years. That's a lot of money, right? And so right now, it's just an option to explore. What does it mean? What's more valuable to the client? Taking this $50,000 and just seeing the immediate savings, or taking this $50,000 to buy down the interest rate and see where it ends up taking you. So I think for us, it's really important, like you said, is kind of asking the right questions and getting the right responses from our clients, and helping them get educated for them they make their own informed decision.
Yeah, it's so good, Sid. And again, I'm a living testimony of that, because we literally just did this for me. So basically, what that means, what buying down points means, guys, is that if you pay up 1 percentage point, and the amounts are different and they vary depending on what's going on. But basically, let's say your rate is 6%. You can spend money. You can use 1 point. Let's say you could pay 1%, 1 point of the sales price. You can pay a point and you can buy down the rate. So I'm not going to get overly specific because there's so many different factors. But if you're looking at a rate of 6% and you wanted to buy down 2 points, and you wanted to buy that rate down from 6% to 4%, by paying a fee, you can now do that. You can buy down the rate. So again, how long do you intend to hold the property is a pretty damn important question, because if you think you're going to hold the property for 3 years, why would you buy down the rate? If you think you're going to hold the property for 10 years, well, then most certainly it's worth buying down the rate, because usually the buy down pivots like 2 to 3 years. When you buy down, you usually see that money back after 2 to 3 years, depending on the amount.
That's exactly correct.
Yeah, so the buy down is a very good thing to look at the moment. We did that. So we went to Christian and we said we'd like to buy down the rate, because this is a vulnerable share, but it's real. I bought my first property ever in 2008. It was at the Edge. And at that point in my life, I saw real estate as a vehicle of increasing our net worth, right? I didn't make much money then. And I was like, I got to use real estate. And so I bought in a building that I can market so I could try to do more sales. And then I knew the market was going to go up. And so I owned this thing, and I had to live in the vehicle that I was using for financial growth, right? And so we bought our first property in 2008. We moved in 2010. What's interesting is that between 2010 and just now, when we bought this place, we moved 8 times in 12 years.
Wow.
So it's like it's hard, and for me that was cool. But now we have the kids, and my wife is totally tired of moving. So now we found a spot that we really love, and this is like we're planting the flag. We're putting Litvak Manor on the front, And this is like 10 years. So it's a very different purchase than I've ever made. The considerations are different. So we
Yeah.
worked with Christian, and we were able to get an interest rate of 4% for a 10-year interest only product at only 10% down by using this buy down option. So this isn't, we're not talking Santa Claus and Easter bunnies here. This is real, people. I'm telling you, I just did it.
Yeah.
Christian, if you can add one more thing, I ultimately chose not to do it, but I'd like people to know it's available. This wealth product piece. If you want to touch a little on that.
Yeah, for sure. But before I go into that, I kind of want to reiterate something you had said before. So you bought your property in 2008. And you think about it, that was a recession year, and that's a year of chaos. And you look, if you think about it, it's all about perspective, right? Some people would think, oh my God, the market's crashing. I'm going to hold on to my money, right? But there are other people like yourself who are like, you know what? This is an opportunity. You know what I mean? And so if you put your spin on how you kind of look at a situation, it really can change your life, like in the future, how you look at things. Looking things that like even in today's market, interest rates are super crazy. You know, business is down a little bit, but you know, I feel like I'm not gonna go into like a rock and climb out when everything is like all dandy. No, I'm gonna grind harder, and I'm gonna talk about what's going on. How can I help my fellow realtors, my friends, like just kind of giving them advice on how to look at things. So kudos to you, and I think it's really important to look at things differently. That's why we kind of go to these seminars. Like even that's what they were talking about here in BNI. Like they were talking about how there was a company that was doing suits. No one was wearing suits during BNI, but they had all this fabric. And then another BNI guy was like, well, you know what? People need masks right now. Why don't you change it from making suits and making masks? And so in the very beginning, the person had to lay off the whole factory worker because there's no one wearing suits. But then all of a sudden, she hired all her people back, and now they started making masks, and they had to distribute to the people. And this is like, it was just a nice thing and to see and to do. And so it was really inspiring. So that was really good.
That's awesome. Yeah, man, you can focus on what's wrong, or you can focus on what's right. And directly from the big guy, Tony. Usually, the only thing in the way, what stands between where you are and where you want to be, is the bullshit story that you tell yourself. So, like, listen, during COVID, a lot of people ran for the hills, and they're like, "Oh my God, that's it. New York City is dead." And some folks said, nah, you know what? New York City is going to be around forever. Let me go and buy some property. Let me tell you something. Every single person that bought property towards the middle or end of COVID, come 18 months later, were very happy with their decision. Actually, anyone that bought any asset, if you bought a watch, if you bought a car, if you bought real estate, if you bought really anything you touched, yeah, man.
It was a crazy time.
Realtor asks who was the bank. Christian works for Citizens Bank. So Stanford Realtor, feel free to reach out to me. I'm happy to connect you with Christian. He's been, we've been working together for many years now. He serviced a lot of our clients, and he's done my last 3 loans. He's just, he besides the fact that like he's awesome as a pro, just like, I mean, you guys can feel his energy, man. Just a genuine human, like he always puts the client first, and like just a good dude. So Christian, the last component I want to touch is this wealth arm.
Yeah. So Citizens Bank is pretty aggressive in terms of their wealth arm. And what's pretty great about it is if you have enough assets, depending on after down payment and closing costs, we want to help our clients manage their wealth, right? And if you deposit as of today $200,000 with us, you get an additional 0.125% off. If you deposit $500,000 with us, you get 0.5% off. So 0.5% off from where you are today. That's pretty amazing. I think right now that's the most competitive out of any of the banks in New York City, probably in the region. So that's really important. And then if you deposit $1 million, you get 0.625%. So I think it's really important that we just kind of lay it all out there. Just kind of give the options, all the options to clients, and talk about it and see what makes the most sense for them.
Yeah, that's right, man. I mean, again, I chose to go down the road of buy down. Because for me personally, I thought the wealth was so good. Like all you're doing is moving money, and you get all these like free perks. Just for me, with the speed that we needed to move out and the tax implications, it just made sense to cut down a check and buy down. But guys, I'm telling you, this is basically free money. Stacy, Michael, thank you for supporting me. It's Christian. It's pronounced. Don't pay attention to the way it's read. It's pronounced win. Oh, there you go. Stacy says she's nosy. So good. Link up, folks. Link up. All right,
yeah,
Christian,
love it.
Any final tips? Any last nuggets for folks out there.
I would say it's a life tip. If you think you can't, you can't. If you think you can, you can. Very simple.
Speaking my language, bro. Speaking my language.
I love it.
I would concur. Look, I would just say that if you're someone that's considering purchasing or you own, you're thinking about doing something, just I mean, again, we've said it on the show so many times. You got to have your team. So talk to me or a broker that knows what they're talking about to ask you the questions you might not think of, like how long do you think you'll own the damn thing, right? And make sure that you're talking to someone like Christian. You're ambassador of Quan, for my Jerry Maguire folks. Make sure you're talking to someone that's got their ear to the ground, that knows what's going on in the financing world, so that you can get yourself the best possible option, which isn't always the cheapest, right? But the worst thing you want to do is listen to this media and then crawl under a rock and miss all of the potential opportunities. That was so well said, Christian.
100%, man.
Well, all right, my man. As always, thank you for your time. Enjoy Singapore. Enjoy the Kool-Aid and the
Thank you,
confidence.
brother.
I'm all into all that stuff. Folks,
Yeah.
any questions, reach out to us. And if anyone needs to talk to Christian, hit me up and I'll make sure to connect you guys.
Thanks for having me. Love you.
Take care, guys. Have a good one, everyone.
Take care.